mode.
Good evening, everyone, and welcome to Admiral Markets webinar 21st of August 2014. Today, Chris is with me, and we together will present you how to select best moving pairs in Forex market. So pay attention to what we're going to say, and you will know how you can trade fast moving pairs, best moving pairs, pairs which generally go in trending mode, which generally are not contained within the range. Before we begin our standard disclaimer, online education materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the authors, me and Chris, and in no way it represents the actual suggestion for the trade. These are .amuk's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only, and this webinar is for informational and educational purposes only. Hello is saying ahoy Chris, zdravo Nenad, yeah, hello, thank you. So, identifying the trend using ATR to spot extremes in price and news release. So those are factors which we will consider in scanning through the pairs in order to find best moving pairs. So, what is a trend? The trend is a series of price movements which determines the main direction. So, if you want to find best moving pairs, you generally want to avoid this kind of movement. This is range movement. Although the range can be 100 and more pips of ATR, which is considered a good ATR for movement, we generally do not want to trade range markets because we just simply don't know when breakout will happen, false out breakout, or potentially fake out. So we just am not sure whether there will be a new trend start or there will be fake out or false breakout. So that is why we need to trade within the trend and find those pairs which are generally moving in a trend direction with big ATR. Now, what is the trend? Trend, as you know, is a series of price movements which determines the main direction. Uptrend is a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. Downtrend is a series of lower highs and lower lows. So lower highs and lower lows. Trend exists on each time frame, so it can exist on 1 minute and 1 month. Generally, if we want to go with intraday trading, we want to spot a trend on, let's say, 1 hour time frame. Usually 5 minutes is used for scalping and 15 minutes is used for multiple time frame entries. Trading solely on 15-minute time frame is not recommendable because 15-minute time frame is generally dependent on 1 hour, and 1 hour is often dependent on a 4-hour time frame. So for intraday, 1 hour is the time frame of choice. Of course, the bigger the time frame, the stronger the trend is, but because we are considered intraday traders, then we want to spot a trend on 1 hour chart. Perfect trend will always look like this. This is trend line, and we see rejections or close or at the trend line. Today, there are no perfect trends so much, especially in August. August is usually a rangy month. Prices do tend to range there and here and there, but generally we can spot nice trending patterns if we know what trend is. How we define a trend? Within any trend, there are other smaller trends that make up the whole trend. As you know, I define a trend as a series of thrusts and pullbacks. So this is thrust, this is pullback, this is thrust, this is pullback, this is thrust, this is pullback, this is thrust, this is pullback. Now, within the perfect trend, which is a zigzag, there is this smaller trend, and you can see how the price is making mini swings. So in this example, we can see that this is indeed a nice swing, this, and this. But this is a mini swing. This is mini swing, this is swing high, this is mini swing low, and this is swing low. So within the trend, there are also smaller trends. That is why we usually want to spot a nice trend. This can be considered a good trend, no matter the mini swings in between, because the price is following either a trend line or maybe EMA or maybe MACD, if you know how to spot a trend with MACD, two-line. Sideways trend is this. It's a ranging market, which is usually a common phase, and which usually marks a consolidation and probable beginning of a new trend once it breaks out. Ranging markets tend to be hardest to trade, and that is why we usually want to stay out of ranging market. As you know, today is 21st of August. We have 10 more days, and then I expect volatility to get back to markets. In September, there should be a volatility rise, generally in all market conditions, but because traders usually trade euro crosses, euro dollar, I expect also euro dollar to continue and follow up. Needless to say, GBP crosses are full of pips, are full of movement, are full of ATR. I will show you later. So, identify the trend. How you can identify the trend? So first, in order to spot good and great moving pairs, you need to identify the trend. So it's not just about the size, it's just about the trend. So for trend to be captured, we need at least one valid swing, retracement. So you need to see, I will show you this in this example, but for trend to be captured, you need at least one valid swing. If you trade multiple time frames means that you are watching 4 hours, then 1 hour and making 15-minute entries. Then you obviously need to look at higher time frames to spot important support and resistance levels. That is only if you're looking on multiple time frame analysis. But if you want to trade with Camarilla, let's say, you're not obliged to look at higher time frames. But obviously for technical analysis reasons and technical reasons for trade, if you're trading MTF multiple time frames, then you need to watch higher time frames. Bullish candles are also important on daily time frame if we trade intraday. So usually if you spot a huge price movement and that marks the breakout of important resistance levels, it doesn't matter which pair this is, let's say this is resistance, and let's say that the pair has broken on daily chart this resistance, then you can consider that as the potentially beginning of a strong trend. You know how to trade big candles, you wait for retracement and then enter. And that is especially true if you want to trade bullish candles and possible early entries. The bigger the ATR, the stronger the trend is, if we had already identified the trend. So once we identify the trend, we need to look at ATR to see whether the pair is moving or the pair maybe doesn't move at all. Now the trick is identify important break point after deeper correction. This is also one trick which I will be showing you. So now you know you need to identify the trend, thrusts and pullbacks. Okay. For those of you who cannot identify swing points, next premium webinar is scheduled. So guys, sign up for premium webinar. I will be giving for all Admiral Market account holders, I will be giving a free swing point identifier. So you can identify with that indicator swing points. So it's easily identified by the indicator. So if you cannot identify manually swing points, that indicator will do that for you. And also round number indicators, which I will be explaining about on next premium webinar. So 2 free giveaways for Admiral Markets Premium account holders, swing point indicator and round number indicator. So this is the first step, identify the trend. The next trick is, if you see a break of resistance or support on daily chart, then you just need to identify a bullish candle and wait for retracement. Whether it is resistance or support, it doesn't matter. It can be a sign of a new trend. And the third trick is to identify important breakpoint after deeper correction. So this was the trend. Obviously this was uptrend. Uptrend came to its end at this point when we see double top. So this is double top, and previous uptrend broke, and this was the start of new trend, which is to the short side. Now we need to have a valid swing, as I told you, for the trend to be captured. You need to see a valid swing. So this was the first swing here. This is the high, this is the low. Now this is the first swing to the downside. And this is the end of that swing. Once this swing has ended, you just make a nice trend line and you can identify this first swing. So when trend breaks, as in this example, you wait for the price to make a swing low. This is swing low. Then you need to wait for a swing high. Obviously this is swing high, this was mini swing low. This is good for making a trend line because we have this point also, and when we connect this point and this point, we can also connect this point here. This is a perfect trend line. So this is the first swing. Now the price, now you know that there is a downtrend because we have already captured this swing. Now we don't know how strong this downtrend will be, but we know that there is a swing which marks the beginning of the trend. Then there is second swing, then there is third swing, then there is fourth swing, and so on and so on. Obviously this is strong movement. So this is one of the ways to identify pairs by trend. ATR is another way, and combination of ATR and trend is maybe the best way. Now I'm showing you 3 ways. Okay. So identify swing points, draw a trend line, and wait. Okay. Wait. Once, third, fourth time, you know that the trend is strong, you will be looking for short entries. Now, this is the final lowest low of this trend. This is the lowest low. Once the price starts to retrace towards the trend line, you need to mark this lowest low, okay? This also could be lowest low, but obviously the price didn't break through this trend line, making it for a deeper correction. We assume that the price is in deeper correction when trend line has been broken. So mark the lowest low and wait for the price to pull back. Price has indeed pulled back, retested the trend line and started to go upward. Then you see, this is considered deeper correction in downtrend. Why? Because if this is the high and this is the low, this is still a retracement because this high has not been broken. So probably this correction can be assumed as, I don't know, close to 78.6 or 61.8. Okay? So this is deeper correction. Now, where is the point of continuation of this strong trend? When the lowest low, if it's broken and when it's broken. So from this point here, we can say that this is continuation. 3 to 5 pips break of this lowest low and candle subsequently close below this point is a continuation. So you can again say that this is a strong trend, and you can try to spot short trades. Okay, this is the trick. Identify important break point after deeper correction. So this is downtrend, obviously. This is the break of this trend line. This is the deeper correction because this is the high and this is the low, and this retracement is still below the double top or the high, and this is considered deeper correction. This is not reversal. Reversal may be only if this highest high has been broken. So this is retracement, deeper retracement. And once this lowest low has been broken and subsequently the candle closed below this lowest low, previous lowest low, we can assume that the trend is still strong and you can try to search for short entry. So this pair is good moving. This is good movement for a pair, especially if you spot this trick. Now, the other way to identify is ATR. This is small ATR. You can see that there is a sort of trend, but guys, 58 today ATR for 7 days is 44. Would you trade a pair with ATR of 44? You can trade, but only like scalp. It's very hard to do intraday trades when we have 40, 50 points of ATR. So if you see that ATR is so small, then you can try to search for pairs which are moving the better. Bigger ATR is 98, so this is good. You can go for a pair which is moving with 100 pips of ATR. So one thing is trend, the other thing is ATR, the third is combination of trend and ATR. That is the ultimate, that is the best. When we say the best moving pair, then we consider a perfect trend and good ATR. Okay? If you want to trade good moving pairs, then you consider only trend or only ATR. So this is small ATR. You don't trade this if you don't want to scalp or range trade. Okay? This is bigger ATR, and this is actually good ATR, 100 pips. GBPN. You can see the movement, but not a big, nice trend. This can be considered a potentially nice trend. A high, low, high, low, high, low. This is good. But this is not so good. This is hard to trade. Now, this is big ATR, 140. And now consider this is August. And in August, if you find a pair which are basically moving more than 60 pips of ATR, that is okay. And we can see that GBP New Zealand is moving with a huge ATR, consider it's August. 140. And GBP New Zealand tends to be the biggest moving pair of all GBP crosses. So you can see that this ATR is really big, okay? 140 in August. And you can try to trade this pair because this pair is moving. Now we don't talk about particularly picking which pairs you should trade or not. We are talking how to select best moving pairs. Either a trend and a strong trend or ATR. So small ATR is 50 to 60. More than 60 is bigger ATR. This is okay, 100 it's big ATR, and 140 is really big ATR. So you can always try to trade the pairs which are moving more than 60 pips of ATR. You can trade, as I say, even if the pair is moving 50 pips, but that is considered to be scalp trades and range trades. Breakout trades are hard to be exploited on, so it's not a big movement. It's slow movement, so you don't go with breakout trades. Generally, August is month when we should stay out of breakout trades. Okay? Now, optimum movement is try to spot the trend. ATR should be higher than 60. And the thing is news. News will give the momentum for movement. You know, when news kick in, you usually get a significant movement. And that will mark probably new intraday trend which can last for 1 or 2, 3 days. Then GBP crosses during London, New York, especially minors. Optimum movement I have identified that at GBP crosses during London, New York phase, especially minors. GBP Swissy, GBP CAD, GBP New Zealand, GBP Yen. They move a lot. Then New Zealand AUD Yen crosses during Asia trades. So New Zealand Yen, AUD Yen. If you trade New Zealand Swissy, New Zealand Yen, GBP Yen can also be a mover. But usually New Zealand AUD Yen crosses during Asia. And Euro miners during London. Euro dollar is not a good mover. Euro dollar, let's see, Euro dollar. I don't care, but I think it's something around 60. Okay? So Euro dollar is not a good mover, especially in August. But Euro miners are okay. Euro CAD, Euro AUD, Euro Yen, Euro New Zealand. They tend to use a nice chunk of ATR during intraday movement. Okay? So, guys, optimum movement is spot a zigzag. If you see a nice trend, spot a zigzag. Avoid the range. You don't want to trade the range even if ATR is big. So trend plus ATR gives you this. This was an indeed good movement. Now, this can also be considered good from this point. So look at this. Nice trend trades. Using moving average trend lines. This is zigzag. You don't need actually to spot a trend line or to draw a trend line to see a trend. This was a trend. And now this was deeper retracement, guys. This was deeper retracement. From this point to this point, this was deeper retracement. Now look at the reaction after that deeper retracement, what we were talking about. Deeper correction. Now this is GBP New Zealand. Look after the big correction. New high because this correction was deeper. And look ATR. It's huge ATR. Especially this is August. Look at this. 146. So guys, I will finish with this and Chris will continue. the ultimate way to choose good moving pairs is try to spot the trend, look at ATR, and look if there was a news prior to the movement. Because trend, ATR, and news will give you a better chance to get into the entry and exploit so needed volatility. Okay? So if you have any questions, now considering my part of presentation, you can ask me now. If you don't have any questions now, Chris will continue. So guys, remember this. Try to spot the trend. Try to see that ATR is higher than 60. That is best moving pair. I don't talk about, you can also, as you can see, you can also try trend, which is good, but not with big ATR. You can also trade ATR, which is huge, but then you might get trapped into range. But the optimum is REN plus ATR, and GBP crosses, especially miners during London, New York, New Zealand ODN crosses during Asia, and Euro miners during London, because Euro dollar is not giving us good movement, big movement. Okay? I don't see any questions, so Chris, you can proceed with your part of presentation, of course. And guys, you know this is ATR. This is ATR indicator which you have been given on premium webinars, so use it. This is also one additional way to use it. Now, Chris, you can continue.
Sounds very good. Let me quickly switch the presentation so that the public can see my PowerPoint. All right, I hope the viewers can see. Let's see, I'll double check that. Yep, looks good. Well, thank you, Nanette, for that great material there. Yeah, how to select the best moving pairs in Forex, indeed very important, definitely, because we have quite a decent amount of pairs to choose from. Obviously, when you just start out trading, you're focused on euro dollar. At that point, many traders do stick with that pair. Maybe they venture into the pound or maybe the dollar yen, and slowly but surely the scope kind of broadens and more pairs come into vision, like the dollar Swiss, maybe dollar CAD, dollar yen, eventually crosses such as even euro odd, pound odd. So this vision is getting bigger and bigger, and obviously then you get into a situation where you're looking at 25 pairs and you're wondering, okay, which one am I going to trade? Which one is the best for today? Which one is the best for this week, etc., depending on the time frames you're trading. So that becomes more important. If you're trading, obviously, more select group of pairs or only one, it's less important, especially if you trade one, obviously, then you're probably not, maybe in the wrong webinar even, but yeah, if you trade a few, it's of course less important. To a certain degree, it's almost, I would say, kind of an instinct. Maybe it's not so scientific, I know, but to a certain degree, when I look at the market and I kind of like look at the various pairs out there, it almost seems, just looking at multiple time frames and structure, I kind of try to sense which one might have the best move. Often that's right, not always, obviously, but there are other ways to be a bit more precise, which we will discuss now. But I do think that, of course, if you look at the market, you're going to eventually get more feeling for the market, and you're going to get this screening time, as Nanette always says, right? Screening time, very important to get the feeling of the market. And the more screening time you have, the more feeling you will get for which pair could be the best. But with that said, though, it doesn't mean that we cannot identify some things, and Nanette has mentioned many of them, and I will repeat a few of them, so I apologize for that. But using multiple time frame analysis, I think that is very good for identifying the best selecting pair. Just to get a bigger idea of the structure, obviously if the daily chart and the 4-hour chart is in a range, then maybe the limit of what we can expect on an hourly is less. If, for instance, we're trading on a 50-minute chart and the 4-hour is also trending, on the euro dollar, but the pound dollar is not, let's say, just to give a random example, then maybe taking the euro dollar is then selecting the better one. So, in that regard, using time frame analysis, I think, does give multiple pictures. It's like trading a new world. Even though it's the same pair, when looking at different time frames, it is looking like at a different universe in a way, isn't it? The 50-minute world of the euro dollar is totally different than the daily chart. It could almost be different pairs in a way. So one pair, yes, it's important, but then what time frame, it could be a totally different picture, couldn't it? So looking at whether there's a big trend or a big consolidation going on is important in my opinion. And obviously the bigger time frames do have a heavy imprint, a heavy impact, like the 4-hour daily chart. All right, but doesn't mean, the market is fractal of nature, which means that basically the patterns that occur on the higher time frames also occur on the lower time frames. And we will be discussing that topic, by the way, in a webinar probably next month. So take a look when, I think it's, well, not sure about the date, I think September 18th. So we'll discuss that later. Let's see, we got a screenshot here from the pound dollar 4-hour chart. And obviously we see, when looking at this chart, we see a very nice up move and a very nice down move on the pound dollar, haven't we? Well, we know that the pound dollar was in a big uptrend, roughly more than the 13 months, roughly a bit more than a year, and since a month now in a very nice downtrend. So if you look at a 4-hour chart like that, using multiple time frame analysis, well, the pound dollar looks interesting, maybe with the exception of a zone right in here eventually. Well, you don't know it at the beginning, but let's say this part, right? Then I mentioned it already, so I'll try to make it quick, but trending pairs obviously, well, they have the advantage that they move a lot. They can surprise traders, so selecting these makes sense because they often go further. Now, that all depends, of course, on how you trade. If you're trading intraday, maybe you cannot capitalize on very long moves as much as swing traders. Doesn't mean that you cannot be a great intraday trader, but I mean, there is just a cap on that. Well, there's a cap on weekly trading as well, by the way, but let's say that you shorted the pound dollar in our live trading room with me at 170.80 and 171, and you're still holding on to that. Well, in the meantime, you got a few hundred pips, but of course you're waiting a long time as well. In any case, the point is that trending pairs can give a big benefit. Let's see. The third point, avoid overheated markets and moments, don't chase the markets. We have a webinar on that, not to chase the markets. Here you can see a trending pair, which is the euro dollar. That was the trend in May, June, July, roughly. We know that we had some consolidation in August, although the euro dollar did break to the downside this week, didn't it? So, well, anyhow, a trending pair like that. So moving averages for trending for that purpose is very useful. Why? Because as you can see on both screenshots, I have moving averages because they obviously give the angle. They're dynamic. That means that they will move along with price. Using trend lines is static relatively because price sometimes misses trend lines, doesn't touch trend lines. Moving averages always provide information. They always provide angle. There's always a distance between price and the moving averages, indicating how impulsive it is. So moving averages give a lot of value to whether a pair is trending or not. ATR, yes, very important indeed. Obviously, the more movement, you might want to choose that as to give you an idea about whether the pair is a good one. A low ATR might not be that useful indeed, like the euro pound usually has a low ATR. The pound yen, euro yen have usually higher ATRs, just like the pound odd and euro odd, and pound in general has high ATRs, usually speaking. Euro pound, odd New Zealand, dollar CAD, dollar Swiss usually have lower ones. Now here we see the example dollar cat daily. You can put a trend line even on the ATR, and when we see basically ATR going through that trend line, that's where we see the bigger breakout. Oh, I talked a bit ahead of the PowerPoint. Sorry about that, but I already talked about the fact that the EMAs are very useful for identifying the trend. And yeah, the angle, the evaluation, while evaluating the angle, you can basically get a story, as I write here, about momentum of price. When price has a 3 o'clock angle, it's ranging. If it's 2 to 4, it's kind of flattish. But if you get between that 12 to 2, 4 to 6 o'clock angles, you're getting more in a trend or momentum even, right? So 12 to 1 is momentum. Then the moving average is at a very steep angle, just like 5 to 6. 1 to 2 is a bit shallower, and I would call it a trending angle of moving averages. When you're getting more than like a 2 to 4 o'clock, it's maybe not a range, but it's not a trend either. It's probably, it could be a breakout soon, but it's more flattish still. 3 o'clock, or roughly 3 o'clock, is a range. There are a lot of things we can use moving averages for, and one of them is this, the angle. And well, obviously what you could do, one method you could do by using these EMAs is looking at the angle on multiple time frames and trying to sense where the opportunity is on which time frame. If, for instance, maybe I have an example actually. Oh, that's even better. There we got a screenshot. The dollar yen daily. Now, obviously, when price is above these moving averages, both of them, and they have a decent angle, then on a daily chart, what does that tell us? That there's a impulse going on the daily chart. So we can then maybe zoom in, or even use this chart. But if we want to use, if you're an intra-week swing trader, then you probably wouldn't be trading the daily chart, would you? So, but this is still good info, because you can then zoom into the hourly and say, okay, if there's some breakout pattern, right, like this, a bull flag, then I might try to position myself at the bottom of the bull flag, or I might try to put a fib on the swing high, swing low, and buy the 38.2 fib, or I might want to take the breakout, for instance. So that would help with using multiple time frames to get that feeling for the potential of that pair. Whereas if the dollar yen is, for instance, in a bigger chart pattern, like this situation where we had last year, partly in August, by the way, then we know that it's in a range. And if you look at the angle of the moving averages, we actually have some angle here. So it's not only the angle that's important, obviously, because when we are in this range, we do have the moving averages at times at a certain angle. At times it's flat. So you got to look at more stuff than the angle, because here those are flat, but here there's an angle, for instance. So chart patterns are therefore important. Often enough, when you see chart patterns, you will see the moving averages kind of like intertwined with each other. You see how most of this zone, the two moving averages I have, by the way, for those that are wondering, probably an 89 EMA on this and 21 EMA close, high and low. You see that these two are intertwined. So that's another often hint that there's some chart pattern going on or consolidation. This is most recently, or not that, yeah, it's the beginning of August actually. Most recently we know that on the dollar yen we had some downside like this, and now we got strung up, so let's see. But this was obviously also a nasty zone, and I lost a bit of interest in the dollar yen already. If I remember correctly, somewhere in when this downside happened, I already thought that, okay, this is not looking good. This is looking like a consolidation, and therefore my interest in swing trades disappeared. And I was still looking for intraday trades, because sometimes these spikes up and down on a 50-minute chart could still be tradable. But from a swing trade perspective, I ruled it out. So you see how you can make judgments that vary from time to time. I think that looking at AO helps too. Looking at the oscillator, the awesome oscillator, for instance, is what I prefer, as some of you or most of you maybe know. If there's a strong AO, I like to trade it because it shows strength of momentum. So it's definitely something I highly favor. I also like it that if you have a strong AO, the price goes back to the zero line. And that is often a signal that sooner or later the price will be ready for a next trend. So these two things I really like about the AO, once again, the awesome oscillator. It shows that strength. So if it's building, if the oscillator is building to the upside, or if it's building to the downside, I like that. But I also like it after that strength if it goes back to the zero line. What is the zero line? Well, let's take a look. The zero line is right here in the middle. I cannot draw that straight. Let me attempt it again. That line right there is that zero line. So when price moves away from, when price moves away from it and then gets back to that zero line, right, that's one moment. Or that is just interesting because of the fact that the price could be making a retracement. This is something that deserves multiple time frame analysis, and there shouldn't be divergence, because here, for instance, right, well, clearly it was a retracement. The AO is back to the zero line, and we did get a follow-through. But then we got divergence between these bottoms. So what happened? Price went back to the zero line after that, yes, but it just kept on going up because of that divergence. So let's see, has anyone else lost sound? I hope not. Could you just, would you be so kind to quickly tell me if the sound is okay? Okay, thank you so much. Great, thank you for all those confirmations there. So I'll quickly write Darshan there. Hope that he gets his sound back quickly. So yes, so basically when the AO is back to the zero line, those are good moments to select that pair on a 4-hour chart. I really like those moments. You would need a bit of patience sometimes before those happen, but when they do, they're very nice. Now, we do have quite a lot of pairs to look at. It's always interesting what criteria do you use first to kind of make a filter of trades. This could be an interesting one to say, okay, I'm going to look through all the pairs, and I'm only going to look at this. And the ones that are closest to that, I'm going to focus on. If nothing is close to the zero line after a strong move down, fine, forget it. This could be one way of selecting the best moving pairs. For instance, it's a quick method. There are tons of methods how you can select pairs, obviously, but this could be one of them. It is fast, and I like it. So when you get that, but you have to be careful there's no divergence, because if you go then back to the zero line, you could have that bigger retracement. So for instance, here we had a decent continuation again. Compared to this bottom, we don't have divergence, so most of the time that would be okay, because we had a very big correction here. So when price then falls, this AO, I would not necessarily call it, there is divergence maybe with this one, but it's like a new leg. So I think that should be okay on average. When you get back to the zero line, you can see that's opportunity for the follow through here. The other point that I made was point 1. Remember that it has a strong AO. So what I mean with that is that if you see this building lower and lower, you can try to catch some of this downside on the lower time frame, right? But you have to be careful, because eventually you get that consolidation, and price gets back to the AO gets back to the zero line. So you can catch often enough some like remaining downside in that leg, but you do have to be careful that eventually the market can start retracing. So you want to kind of like hit and grab, enter and try to get that profit and not linger too long, because yes, it can last, the momentum can last long, but sooner or later you will bump into this, and you want to be careful. You don't want to sell it right in here, let's say. Okay, it can happen. Obviously, everything in trading is nothing. It can be perfect, so it can happen that a trader trades here thinking that it can still continue. But if there's too much of an extension on a shorter time frame, you might want to be careful. That's all. So you can trade. My point is two ways. You can trade the retracement of the AO, or you can try to trade on a lower time frame. The momentum still down there, if you see what I mean. Hopefully that's clear. If not, let me know. Here, plenty of examples of when the AO gets back to that zero line. Yes. But we kind of can rule out maybe this one because of that divergence. You want to be careful also that if there's divergence, that sometimes you get these three-wave corrections. Why three waves? Well, I don't want to bore you with Elliott wave, but that does explain why we often see that pattern, obviously, is the Elliott wave theory. Divergence, I again talk ahead of myself. We want to pay attention to divergence on multiple time frames and multiple instances of divergence on one time frame. Same example here. Yes, typo indeed. I already was wondering. Yeah, without the I indeed. Yeah, something was wrong indeed. For instance, here between the tops, no divergence. I mean, there is divergence, so be careful with that. That could be a reason not to select it for trending trading, but it could be a reason to select it if you are a reversal trader, obviously. So it does heavily vary on what type of trader you are, right? Size of the candles. Big Mubasa candles are, very meaningful. Strong candles, what I mean with strong candles is the close near the higher low, or massive wicks. They tell a lot, and by looking at that, by scanning that at the beginning of the week or the beginning of the day, we could get maybe a feeling for which pair could be interesting. If there's an extreme small candle, maybe we could be interested in a breakout, or if there's a very talkative candle, a very communicative candle, like a big wick, like a strong close. Those are also very interesting signals that you might want to incorporate into your decisions which pair to take or to look at. Then the impulsive versus the correction. Impulse, also we discussed that, but let me just add that basically it's a fast move to target. And the advantage of trading a faster move is the fact that you have your profit quicker, obviously, which means less insecurity of ourselves with the trade, but also we have quicker opportunities. We can move on to new opportunities quicker, I mean. Always difficult, of course, to find out when the impulse actually starts. That is always a bit of science. I would say that's a different topic again. We have a breakout webinars on that. Probably that's also why traders sometimes trade ranges. I prefer impulses because of those reasons. But with ranges, you have the advantage maybe of a higher win percentage but bigger losses. And ultimately, the best pair is the one that matches your strategy. Here you see, by the way, that impulse, for instance, to the upside, where most of the candles in an impulse are, if it's an up impulse, are bullish. Their candles are near the high, and the majority are bullish, and the upside candles are bigger. Usually speaking, the downside candles are smaller. The opposite would be true, of course, for a bearish momentum. Another tip with selecting pairs is keep track of your stats. I like strategies. I think that strategies really that work well do well on almost all pairs, but it's unavoidable that some strategies will work a bit better on pairs than others, than other pairs. You do have that fluctuation. That usually does happen. So keeping an eye on that makes sense, but you want to make it a continuous thing, because one year may be great on the Euro-odd, maybe so-so in the next year, but then again great on the third year. So this is flexible, this is dynamic, it will change. So you don't want to say, okay, I looked at the stats once and that's it. If you do this, I think it's better to keep it a routine so that you keep a finger on the pulse in a way what your stats are saying about the pairs. Overall, some last things, you can use currency correlations with selecting the best pair. If, for instance, you're already in a Euro-odd trade, you might not want to choose something that's heavily correlated to the Euro-odd because, well, you're trading the same thing with the same risk. So that would probably not make sense. So that would be something to look at if you're in a trade already. Currency characteristics. There are certain things that certain pairs do differently. The pound dollar has a different character than the dollar yen. The dollar yen, when it's trending, I noticed that it likes to make smaller bull flags or bear flags. It likes to make a big impulse, make shallow pauses, and then continue. That's the dollar yen. The pound dollar, however, likes to do, this more often than not. The other way around, actually. Sorry. A totally different environment, usually speaking. Of course, that does depend on the higher time frames as well. But if you have a trend, the GU will also sometimes have flags, I'm not saying. But on average, I would think that what I notice is the dollar yen makes usually very shallow pullbacks. Pound dollar has more the tendency to make spikes and deeper pullbacks. And each pair has its characteristics, I think, personally. Like the Euro pound, I find quite a wacky pair. The Euro odd and Euro yen, I think, are interesting trending pairs. Wei, for instance, told me that dollar Swiss is good for breakouts in the London, for instance. So, when you look and you get more screening time, I'm sure you'll bump into things that have their specifics for pairs. And last but not least, the psychology, your own psychology, which pair you might like most when trading. Well, I hope that it helped with looking at pairs and selecting them. Basically, when you're selecting pairs, you, I think, want to choose one or two characteristics or criteria that you find very important and select on that. Filter trades like that. If, let's say you're looking at 25 pairs. Choose one or two criteria that you scan the market, the very first thing you scan the market with. And with those two things, on average, you reduce the list to 5 pairs. Well, you kind of like chop down 80% of the pairs by using criteria that you find worthwhile, and you got pairs that meet those criteria. And then you can do other analysis. Then you can check which 2 of those 5 meet other things. You can do a bit more deeper analysis. You can look at multiple time frames on those 5. So you have, it's like a funnel, isn't it? You start with 25, and then you have one criteria. So then you have 15 pairs left. Then you have the second criteria. You have 8 pairs left. And then you look at multiple time frame analysis on those pairs, and you got 3 left. I don't know. You see what I mean? You got every time you add a criteria, you kind of like filter a bit out, and then you have some food pairs left that you can do overall analysis with other tools and make a combination to see which one you like the most for that day. Or you can keep an eye throughout the day on those 3 to 5, or how many ever you want to keep an eye on, depending on your availability. So, well, I hope that that helped. Let's see. Lau says, talking about trading in the news, are majors more reliable and predicted rather than minors? I'm not all too sure. I don't really. I mean, I do look at the news and I do look at the reactions. I hardly traded it, like specifically news events. So, but I think that as far as I can remember, I don't really see much difference in the reactions on the news event. Sometimes you'll obviously see price maybe move further on certain pairs because of how the crosses relate to each other a bit. Most of the time, though, they move quite similar because I think the rest of the pairs are not moving. Often when you have a news event on the pound, you won't see much movement on the euro dollar for the moment because it's like the pound is moving. So all currencies kind of stand still. I mean, roughly speaking, obviously, there are always exceptions to everything, but yeah, better spreads on majors. That's true. Although with admiral markets, the difference is smaller than traders might think. So check that out. Actually, I have a slide, I think, somewhere here. Here, look at that. New Zealand dollar, Aussie 1 and 1.5. Odd Swiss 2.2. I mean, 2, exactly 2. Dollar CAD 0.9. We'll have the next. Oh, I guess we'll have the next webinar is the next webinar next week on Monday with Tarantula. We'll take a look at the recap. It's going to be the same schedule, in fact, as always. So I hope that you will join us then. We'll be taking a look at. Let me take a better look specifically. Recap on Monday, Tuesday, Camarilla, Wednesday, intraday and price action, Thursday, price action again, and how to create your own strategy. Plus, of course, the premium webinar 14th of February. Well, folks, thanks so much for joining us today. Dikuyu, yeah, Lau had Lau visited Czech Republic. That's why you know the words. Got it. Great. Dikuyu moc, thank you very much. Hope you enjoyed the time in the Balkans and Czech Republic. Great stuff. Thanks everyone for joining, and I look forward to seeing you next week. And good trading in the meantime. Cheers, everyone.
Cheers. Bye.